All right, looks like we're ready to get started here. First off, I want to thank all of you for joining us today. We're going to be going over some pretty important topics here regarding various aspects of the market, financing, and then also how Doorvest can help you build your portfolio in these times. My name is Amanda. I'm a client partner here at Doorvest, and with us today we have Andrew. He's the co-founder and CEO of Doorvest. Andrew, you're the star of the show today. I'd love to start off with an introduction. If you could tell us a little bit about your background and how you got into real estate.
Yeah, thanks for having me. I'm excited to dive in with you. Of course, this has been sort of the talk of the town. So yeah, excited to see where we go with this. Yeah, hello everyone. Thanks for being here with me today. Yeah, my name is Andrew, CEO of Doorvest. I think to Amanda's question, sort of the background, it's funny whenever people ask me this question, it's like, what's like the Andrew background and what's like the Doorvest background? And I think it all kind of interweaves into one. I'd probably say my personal background, at least as it pertains to real estate, kind of goes back to 2014, which is around the time when sort of started working and had some savings and was looking for an avenue to generate some sort of income security and build a long-term nest egg. Probably keywords that you all are probably familiar with and probably the reason why you're here today. But at the time, kind of stumbled with sort of those keywords, kind of stumbled my way into real estate investing. Like I grew up sort of squarely middle class, but never financially secure. And so was looking for an avenue to generate income security for myself. And so real estate was sort of the path that I ended up taking. And so I was fortunate in 2014 to have bought my first rental. It was a 3-bedroom, 1-bath in Sacramento, California. And it was what sounds like a crazy number at this time, but it was for $96,000. It was the cheapest home that was actively listed in the entire city at the time. Went through sort of the school of hard knocks with that home. Like had everything from like poor resident to a home that I was expecting to be ready to go, and then had to figure out how to do renovations. And like my first mortgage fell through, so I had to scramble and figure out how to get it financed, and like all of like the things that hopefully our customers don't have to experience. But anyway, it was a start, and it was a really good start. And then so one kind of led to the next, and then over a period of time, kind of was able to have built up a small double-digit portfolio, and then really along the way, spent time with probably a lot of you here, and then my peers and colleagues at Doorvest, and people within the network and extended groups of folks around me, folks that had some savings, had some investments, and were kind of intrigued by real estate, but couldn't get started. And there was never really sort of the singular platform to kind of point them towards as sort of an easy way for anyone anywhere to get involved into real estate. So that was kind of the genesis of Doorvest, is kind of this organic platform for anyone anywhere to buy and own an investment home online with sort of a broader mission to advance financial security. Sorry, that was a long-winded background, but hope that answered your question.
No, that was great. And I feel like those first 1 to 3 deals are the hardest deals to make in real estate. Correct me if I'm wrong there. But I know we have kind of a diverse crowd right now. Some people may already know about our process, some may not. Can you kind of touch on the mission of Doorvest and a little bit about our process?
You might have caught some of this earlier, but our mission is to advance financial security for all. What that means for us today is making investment homeownership accessible to anyone, anywhere. So 70% of our customers are first-time homeowners. And then beyond that, 18% of our customers at this point have purchased subsequent homes. So kind of our mission and our business is to help folks effectively buy their first investment home, if not their first Doorvest investment home, and then sort of journey with them as they build up their portfolio and assets under management over time.
Awesome, I appreciate that. Thank you so much. I'd also like to mention, if you are interested in our services, hang out until the end so you can receive a discounted deposit code. But let's dive in. There's been a lot of speculation, a lot of fear circulating in the market, real estate and stock market. I think a lot of investors right now are thinking, is now still the right time? So I'd love your thoughts on that, Andrew. Do you think now is still the right time?
Yeah, it's a great question, and certainly sort of the topic du jour. I'd probably say first and foremost, philosophically, what I've always sort of subscribed to is that it's less about timing the market, but rather time in market, which is how do you sort of get an entry point and then hold on to this asset as long as possible. And of course, this applies to kind of my personal philosophy around real estate, but also applies to other investments, whether it be the stock market, public equities, index funds, et cetera. And so that's kind of first and foremost. Maybe I'll start with a story about kind of when I started getting into real estate investing, which I think I alluded to earlier was 2014 at the time. Again, it was in Sacramento, California. The home that I ended up buying was a 3-bedroom, 1-bath, rented for $96,000, and I think that the rent at the time was about $1,000. And again, this was the cheapest home in the city active at the time. I remember at the time asking, like, this must be sort of the top of the market. Like the person who I bought it from bought it right out of the bottom of the recession for 45,000. And lo and behold, that clearly wasn't the case. And that wasn't sort of the only instance where that's happened before too. Like another more recent example was like early COVID. We at Doorvest and myself personally, we're often asked the question like, oh, it's COVID, what's going to go on, that sort of thing, and had a very similar approach to that as well. And we all kind of could look back in history and kind of see what happened as a result of post-COVID. I'd probably say there's lots of folks that are more smart than I am that are spending hours sort of figuring out where's the market headed. And there's no consensus answer. And so I think what that means is that there's just no clear answer. And so if that's the case, I think it goes back to time in market. And if you could get numbers that you're able to pencil in and meet your investment objectives, and the major reminder is that this is a long-term buy and hold, and it's an amount of investable savings that you're able to part ways with for that period of time. I think now would be a good time. Again, factoring in sort of your numbers and your investment objectives.
Love it. So you mentioned time and market. I'd love to hear kind of your context behind time and market versus timing the market, because I do see a lot of clients trying to time the market right now. What do you really mean by time and market being more important?
Yeah. So I think the beauty of real estate is that it offers several different advantages. You probably know this stuff better than I, but there's sort of the income that you're generating through the rents. There's sort of the long-term appreciation potential, which even the historical numbers, which hover around 3 or so percent. Oftentimes people are getting that with a mortgage. So they're getting kind of 5-to-1 leverage. And so that 3% levered up looks like 15% as sort of annual ROI. And then because you're getting a mortgage, you have sort of residents that are helping you pay down your mortgage and therefore helping you build up your equity. And lastly, there's sort of all the tax advantages that you're getting, whether it be all the write-offs that you get as a result of owning the home, which is effectively a business, or the depreciation that that is not actual expenses, but is something that you're able to write off, or whenever you're ready to trade up, you're able to defer capital gains through 1031 exchanges and that sort of thing. I think the more time in market, the more you're able to participate in sort of the rental income that you're generating from day one, the appreciation that takes time to build up, the fact that your residents are helping you pay down your mortgage, that sort of thing.
Right. And is there any advantage to holding on to your cash in a time like now in a market like this?
I think that was a little bit of a toss up, but yeah, I mean, we've seen inflation somewhere hovering around 8%, and we've seen sort of maybe your savings accounts sort of creep up to 1-2% or so, which is really high compared to recent times, but nowhere near kind of where inflation is at today. And then of course some of the alternatives where we see sort of the volatile stock market and things of that nature. Of course, I'm biased, and this is where I work and things of that nature. But I do believe if your investment horizon is long enough, now could be a good time.
Got it. With this market, like you said, interest rates increasing, housing prices maybe stabilizing a little bit. Do you think that there's a new strategy investors could be adopting when it comes to analyzing what deals are right for them?
Yeah. I'd probably start with so first and foremost, I'd start with the fact that it's important to focus on sort of one's investment objectives and how that pencils against how a potential deal pencils against that. And so being extra clear upfront helps you sort of have a filter. Like, if we're looking for a long-term buy and hold, then the answer means that it's okay if maybe the market softens a little bit. Maybe it goes up a little bit and then drops a little bit and it goes up again over the long term, over a long-term time horizon. If it's definitively a short-term investment, then maybe you should be looking elsewhere because there is some volatility and things of that nature. And so I guess the first piece is to be crystal clear about what your own investment objectives are, especially as you're heading into this environment. I think secondly, as it pertains to real estate as a broad asset class, historically what we've seen during downturns is sort of the very upper end and the very bottom end of the market are kind of the ones that are a little bit more volatile. But housing at the end of the day is a utility. And so what that means is that sometimes when folks kind of have more upper end homes, and then there maybe for whatever reason they decide to sell off. As a result, home values soften a bit. Housing is once again a utility, and therefore these same individuals have to move into housing somewhere, and it has to be rental housing. And so we've consistently seen sort of the stability of sort of, call it the class Bs or class Cs of housing.
Got it. That's where Doorvest buys home, is these developing neighborhoods, which is the class B and class C. So interest rates have gone up a lot, as we've been talking about. I think right now they're considered in a neutral position, but I think that at the end of the day, it comes down to the affordability of these houses and the rents with that. Would you agree with this? And if so, what are some ways that investors can get creative with financing in order to achieve lower rates?
Yeah, totally. I definitely agree. It seems like, of course, I'm not a mortgage expert, but it does look like interest rates have stabilized quite a bit. It's interesting. I mean, you and I both lived through this, and I'm sure a lot of sort of those that are listening in today saw this as well. I think it was around like April or so this year, where like it felt like every week when you open up the news, you'd see a new headline about mortgage rates are up 1%, and then the next week they're up another percent, and that was kind of like the period of peak volatility. But it's since stabilized. Of course, it's stabilized to sort of this new norm, which is slightly higher interest rates than we've been accustomed to sort of in recent years. And so I think going back to kind of the initial thought about investment objectives, again, interest rates are one input to kind of the entire investment picture. And so being crystal clear about kind of what your investment objectives are, and then using that as a filter, and then the variable, which is the interest rate, maybe shifts your outlook, but it shifts your outlook just broadly. In terms of like creative financing, I'd probably say two things on that front. I'd probably say number one, again, a mortgage is one can refinance a mortgage. I remember hearing stories about when my parents were buying their first home when I was little, and I think their 30-year fixed mortgage used to be 15% or so of that, or at that time. Over time, mortgage rates had gone down, and so at some point they refinanced into a lower interest rate mortgage. So that's certainly an option. If you're looking to optimize for a lower monthly payment, maybe you could get creative and think about possibly a higher down payment, because there's not that many other avenues to really invest your capital today, or possibly like an ARM or something of that nature.
Got it. We've heard a lot. So ARM loans are an interesting topic right now. I get a lot of questions from clients. Do you think that these loans are a bit more on the risky side for investors? Or are you seeing these as kind of a stable way to achieve lower rates?
Yeah. I think this is a very nuanced answer, and it really depends on the individual and, of course, their investment objectives, as we kind of talked about earlier. Certainly, with something like an ARM, for those of you that aren't familiar, it's called an adjustable rate mortgage. It's a little bit different, but it's also conventional. It's a little bit different from a traditional 30-year fixed mortgage, but still a conventional mortgage. With the adjustable rate, that means that you effectively have a period of time where the rate is set, and then from there it kind of could go up and down depending on the market. I think it does come with a bit more volatility, which means you lock in a lower rate today, and then you're kind of making a bet on the future. If you believe that in the future mortgage rates will go down, then yes, I do think this ARM could be a great option. But if you believe it's going to go up, then maybe it's wise and prudent to sort of lock in the lower rate today. But to your question, I do think there's sort of the risk and return. Like your return is you're able to get a lower rate today. The risk is that there's some volatility and changes in the rate down the road.
Got it. Awesome. Thanks for that. So that concludes the topics that we wanted to cover. A lot of the topics that I get on the calls and are on a lot of our minds. So I wanted to move on and leave some time for a little bit of Q&A. We have about 35 minutes or so. So I think we can move on. If you have any questions, please feel free to utilize the Q&A section at the top or bottom of your Zoom screen, and we'll try to get to all of your questions. So we have the first question coming in. What are you seeing in the markets today with the looming recession?
Yeah, so I guess it depends on your definition of a recession. I think historically, sort of the definition that I've subscribed to is two quarters of declining GDP growth, in which case we're already in the recession. And so regardless, in terms of the markets in general, I think if we talk about sort of public markets, it feels like things are, maybe we're bouncing along the bottom at this point, possibly. Who knows? That's kind of the optimistic view. Hopefully we're bouncing along at the bottom, and then at some point we kind of recover. Whether or not we recover to 2021 highs, I'm of the opinion that we're not going to. It feels like 2021 was kind of an anomaly, but who knows? I'll leave that to sort of the experts on that front. As it pertains to real estate, we've definitely seen sort of a softening, not yet a decline. The question is like, is there going to be a decline, and if so, when? And I'd probably say we're definitely not going to see anything similar to 08. As a refresher for folks, like 08 was purely a housing driven recession versus today it doesn't look like that's the case. And actually, as a result of 08, a lot of construction builders ceased supply, and therefore you've probably seen this in the headlines as well. It's like housing is in sort of all-time supply shortages, and so I think that the general consensus is that maybe home values soften a bit, maybe they flatten, maybe they go down a little bit potentially, but we don't anticipate seeing anything drastic.
Right, and like you said, 08 was kind of an anomaly, and that was the housing crisis. But prior recessions, we didn't see much of a change in real estate, correct?
Yeah, absolutely. I mean, one can kind of go through and look at all of the charts as well. Like 08 was an anomaly in the sense that it was a housing driven decline, and so we kind of saw more elasticity in home values. But even so, like it was very market by market dependent as well, and a lot of sort of the core single family rental markets were ones that withheld sort of the downturn as well.
Got it. All right, we got another question. How do you measure long and short term in the interims of years?
Yeah, I think it really depends on again, an individual and their investment horizon. So what is a short-term investment for you might be different from a short-term investment for me. If we were to use sort of a generalistic answer, I'd say that long-term is probably something that could withstand a downturn. And so I'd give it probably a 10-year time horizon, to say the least.
Nice. All right. We have two questions. Austin in particular, but we're not currently operating in Austin. How investors are seeing negative cash flow? What are your thoughts on investors seeing negative cash flow in this time? And then what are some other markets where you can still find decent appreciation in cash flow?
Yeah. I probably start with negative cash flow. That question is an interesting one, and I think it boils down to risk tolerance. Effectively, it's the time value of money. Maybe you lose $50, $100, whatever that number is today, in sort of the hope and the belief that in the future this home is going to be worth a lot more, and therefore you recoup that $50 or $100 a month in spades. And so that's kind of the approach that I've seen a lot of folks do, especially in sort of the higher higher value markets, such as Austin, such as Denver, things of that nature. I'd say again, this is individual specific. For me specifically, I think it's nice to break even roughly, to be able to sort of weather the storm, have enough cash coming in where you kind of pay all of your operating expenses, etc. And then the ability to break even actually also gives me the ability to withstand and hold on to this home for a long time. Because if I was too deep into the red, I think you get you get the tendency to want to not be able to keep feeding cash into this home. Whereas if it was self-sustaining, you might be able to. And I think I missed your second question, Amanda.
Yeah. So what are the markets that we're still seeing decent appreciation in cash flow?
Got it. Yeah. I think these two markets might be slightly different sort of investment strategies depending on the individual. But I think if we're thinking about something that's balanced, I think a lot of the markets that Doorvest operates in is really focused on that. You get a little bit of cash flow. We're not purely optimized for cash flow or income, but you also get some good long-term upside potential as well. And so I'd probably say some of our core and sort of oldest markets, like the Houstons and the Atlantas of the world, have sort of served and leaned a little bit more less yield focus and more sort of upside focus, whereas some of our newer markets, such as Columbus, which we kicked off earlier this month, or Oklahoma City, lean a little bit more sort of on the yield side. So again, depending on your investment objectives, you kind of are able to narrow in on our market a little bit more.
All right, cool. Another question we have from a Doorvest deposit holder: the cash flow that we see or we project on Doorvest, does it usually match the projection estimates? And if not, is there a variance there from the cash flow that we project?
Yeah, the short of it is it should. It should certainly in the short term, it should match it. Longer term, I mean, there's some forecasting in that, and I'm sure there's some volatility. At least in the short term, I mean, we're placing the resident, so we have confidence in how much this home will generate in rental income. And then as it pertains to sort of the other operating expenses, we as an institution pay for a lot of data on the back end, whether it be our proprietary data or sort of vendors that we work with. And so we're able to pull numbers around property taxes and things of that nature too.
Awesome, love it. We do that rental guarantee as well, so that rental income is guaranteed for 1 year. Just to speak to that a little bit further, why do you recommend someone going with Doorvest versus doing it themselves? So finding a home themselves, renovating it, and finding a tenant and managing the property themselves. How does Doorvest differ in that manner?
Yeah, I'd probably say these are both viable options, and it's a matter of preference. So on one end, you could kind of research markets, then find an agent, then you write a bunch of offers, then you get an offer that sticks, then you figure out how to get the mortgage and go through title and do insurance, and then you finally close on the thing, then you figure out how to renovate it, lease it out, manage it, do accounting. And then, by the way, in order to build a meaningful portfolio, you got to go through that a handful of other times. We've seen that most customers that sort of gravitate towards Doorvest are folks that either don't have the time or the experience or the time to acquire the experience. And so what that means is you as an individual, especially if like this isn't your full-time thing, you spend more time, you need to spend more time, and you also have more risk because we as a platform sort of have these efficiencies. We're able to pay for the data. We have GCs that we work with all the time and things of that nature, and so are able to weather some of the risks as well. Again, I think it boils down to preference. And so if folks are looking to save time, get some sort of, and get support on it, then I think Doorvest could be a great option. If folks kind of want to sort of get the sweat equity and kind of go through everything themselves, it's worth a shot too. And we've actually also seen customers where, actually an interesting story was like, well, one of our customers I spent time with recently bought his first home through Doorvest, first ever home through Doorvest. Second home was like, okay, I get the swing of things. I'm gonna go try to do it myself. He ultimately did. They're still in process of finding a resident. And I think the quote that really stood out to me was like, I'll never buy a home outside of Doorvest ever again. So again, I think it boils down to a matter of preference.
Awesome. So people are definitely getting their time back when they go through Doorvest. We're definitely lowering those barriers to entry as well. Another question we have, when should I put down a deposit? So if I'm ready to close on a home in 1 to 3 months, 3 to 6 months, how soon should I put down the deposit?
Yeah, Amanda, I think this is probably a better question for you. I have an answer to, but I'll let you maybe take the first stab at it.
Yeah, I don't think it's too soon to put down a deposit. I think it's always good to go ahead and get started, start receiving homes, start giving us feedback on what you like, what you don't like. So when you are ready to pull the trigger, you have in mind what you like and you're able to act quickly, because Doorvest homes do get reserved fairly quickly. So you want to know what you want before you put down a deposit. I'll let you expand on that, Andrew.
I think you said everything, but I would have said the same thing. Like I think our deposits are meant as a way for us to gauge customer intent, but again, it's not binding. And so usually, what I'd encourage if a friend or a friend of a friend was asking was like, just put down the deposit, spend some time with the Doorvest team, come through some homes that we're attempting to match with you. And that kind of gives you a pulse of the lay of the land. Hopefully we can find something that you like. But if for whatever reason we don't, then that's okay too. No harm, no foul.
Love it. We have someone here that wants to go in on a Doorvest property with some business partners, but has never purchased an investment property with business partners. How does Doorvest assist with that?
Yeah, there's quite a bit of nuance there. I think that the first one I'd say is like, we've done this plenty of times, and actually, I'm in process of buying a Doorvest home with my business partner, who happens to also be the other co-founder of Doorvest. So pretty pumped about that. But I think it really depends on the sort of the specifics. I'd encourage you to spend some time with the Doorvest team. Lots of experience, sort of coaching folks through this process. And we have some partners that we work with that kind of make it really easy as well. I think if there was one takeaway from this, it's really just to be clear and clear about everything up front. And this mainly applies to sort of investment objectives. Like, are we gonna aim to hold this for a long time? Is it okay if like the home value soften for a bit? Is it okay if like is it okay if like rents don't grow as much as we had anticipated? Like, what do we do in sort of those instances, and that'll save sort of the pain and heartbreak later down the road.
We also have, like you mentioned, we have some great partners to help you with structuring your LLC, getting organized, about who is putting down how much, and yeah, just the all-around structure for LLCs and people that want to partner up for their investments. So feel free to reach out to us with any questions about that. We have some questions about property management. Who decides the rental price on our properties?
Yeah, this is a function of sort of our market experience. So we have a little bit over 300 homes under management. And so kind of using our actual data, that helps guide our judgment. We also work with other partners, whether it be, I think I saw a question about House Canary, whether it be House Canary, as well as other vendors that kind of feed into our data. And so a collection of those kind of spits out our rental projections. And again, this is something that's critically important to us. Like, it's important for our business, as a business, for us to help customers sort of buy their first Doorvest investment home. And I think where we succeed as a business is over time, if customers sort of come back and purchase subsequent homes. So it's critically important for us to be able to forecast rental values well. And then beyond that, we feel confident that's kind of where we offer the rental guarantee on the back end.
Right. And then in years 2 and 3, what is the strategy for rental increase, years 2, 3, and beyond?
Yeah, so we have an automatic clause. I think our general philosophy is that we want to hopefully support as the rental market continues to go up to be able to increase rental values over time, but within reason too, because it's important for us to be able to sustain that resident in order to ensure sort of this passive experience without turnovers and things of that nature.
Awesome. So I know you mentioned that Doorvest, we use House Canary. We use this to project our current value of the homes. What is your confidence level when it comes to House Canary's current value and rent estimate projections?
Yeah, I'd say House Canary generally very confident. Like they power so many of the large folks in real estate, and they do a lot of the work behind the scenes. And so they have lots of data, and they have had lots of iterations under their belt. So feel good about that. In terms of the rents itself, kind of as I mentioned before, House Canary is kind of one. We use our proprietary information, and then we use a number of other data sources to kind of inform our forecasts.
Got it. Kind of a tough question, but because I know it is so situational. What happens if there's vacancy after 1 year?
Yeah. Again, I think it's situational, so thank you for that. But yeah, I mean, again, I think the only thing that I could say is like, it's in our best interest as a company. So when we started Doorvest, the focus was really around aligning incentives with that of a long-term focused passive investor. And by the way, we only make income, or we only make management income if and only if the home is generating rental income. So it's in our best interest to make sure that this home doesn't stay vacant. And if it happens to be vacant for whatever reason, maybe someone was renting a home and they needed a larger home because they had a child or something like that. It's in our best interest to lease and fill the home as quickly as possible. Yeah.
That's a great answer. We have some renovation questions. So are the renovations done by the Doorvest team?
Yeah, I guess yes, with a nuance. So we have an internal renovations team, super experienced people, lots of folks that came from some of the big iBuyers, and then some folks that spent time at some of the large single family rental REITs, Invitation Homes being one of them. And so our renovations team is comprised of those folks, and the actual renovations and kind of the general contractor work. Oftentimes we have partners in any given market that support on that.
Got it. And that kind of speaks to repairs and maintenance as well. We have our contractors that handle those repairs and maintenance.
Yep, exactly.
Awesome. So we have Zillow, who's obviously very well known for kind of inaccuracies with Zestimates. How does the Doorvest price after renovations at fair market value compared to those Zillow Zestimates?
Yeah, I'm not going to comment on whether or not on sort of our views on Zillow. I mean, they're obviously a very big company in the space, and actually, like a lot of our progress, at least as a company, they kind of paved the way with what I call sort of real estate 1.0, them, Trulia, and some of the other companies. I'd say in terms of like the Zestimate specifically, I think a lot of this kind of boils down to the incentive structure. So if you think about the core business of Zillow, ultimately their job is to their job is to sell leads to real estate agents. And so if you feel like your home value is really high, then you're much more inclined to chat with a real estate agent, and the real estate agent is ultimately the person that's paying the company for the leads. And so there's kind of an incentive for them to believe in higher home values.
Got it. So does Doorvest build in a margin for itself after the renovations that are complete? And is that included in the fair market value?
Yeah. So the short answer is yes. Usually we target a little bit under 5%. And so this is meant to account for sort of the value add work that we're doing. I don't know if this was mentioned earlier today, but on average, we do about 20 to 25% of our purchase price in renovation. So pretty heavy stuff. We're replacing oftentimes the HVAC and the roof and all these major items that the end investor is able to kind of get the finish and package home. So short answer is yes. That's kind of one of two ways that we make money. One is sort of the margin up front, and then secondly is around sort of the management fees ongoing.
Got it. We've got another question here. Do you recommend that investors put homes into an LLC or hold the title personally? And then with that, do you help investors find lenders willing to lend to LLCs?
So short answer again is very nuanced. Would encourage you to chat with someone on the team. Plenty of experts that kind of have gone through this and have seen other customers do variations of it. I think the question needs to begin with what is the objective that you're looking to accomplish here? Is it for liability or is it for sort of tax purposes? If it's tax purposes, I'd probably say you're fine going with. If it's for tax purposes, I'd probably say you're fine with sort of your personal name. If it's for from a liability standpoint, then potentially, first and foremost, it's important to have really good insurance on this, whether it be home-specific insurance and potentially sort of an umbrella policy as well. And then the remainder, I think, is a little bit more nuanced. In terms of LLC lending, the short answer is yes. But again, depending on the type of LLC and how you're structuring it, this could lead to a number of different paths. And so maybe you could do a conventional, maybe you can't, and maybe you'll use a portfolio sort of non-conforming loan. This really depends. And again, encourage you to chat with someone from our team to kind of strategize on that.
Yeah, and on the Doorvest, and just to speak to this a little further, we do accommodate LLCs pretty easily. So would love to chat more about that if you want to reach out to us after this webinar. Another question here, does Doorvest allow home exchange, so selling back their investment property that they previously bought from us?
Yeah, we've had a handful of customers do this in the past, and this is kind of a bread and butter for us. So ultimately, it's a Doorvest quality home, and we sort of have the same confidence because we did all of the renovation work and we've been managing the resident and things of that nature. And so whenever the timing comes, hopefully you as a Doorvest customer stick with us for a long time. But whenever your financial situation changes and maybe you need some liquidity, we're here to help facilitate the sale for you to a different Doorvest customer.
Love it. We have one quick one. Do you have customers doing creative financing such as ARMs 1031s when buying Doorvest homes? And do you support them? I could probably knock this one out for you quickly, Andrew. We do have a lot of clients going down the ARM loan path, 1031s, getting creative with their financing through partnerships. We definitely support them and can share our partners with them as well. But we definitely support them, and it's usually a pretty seamless process. We just have to communicate about your needs up front, and then it's fairly simple to move forward.
Yep.
Another question. So besides from 2008, what is the next largest drop in overall real estate market that you've seen?
Yeah. I think if I recall correctly, I think it was 1990 or so was kind of the last one. Amanda, you're nodding, so you probably know better than I. But I believe that was the one too. It was nowhere near sort of the level of 2008. But I think we definitely saw a little bit of a hit. If I remember correctly, on average, it was like sub 10%, if I remember correctly.
Yeah, I think so. I think 13% in 08.
Um,
It took about 3 years for the financial crisis in 08 to recoup from that 13% drop. But yeah, I think housing crisis before that, I think 1990 was the next one.
Thank you.
So I see some of the houses pricings are cut down on Doorvest. Is there a particular reason why, and how are you able to do so?
Yeah, it really varies on home to home. I mean, I'd be disingenuous if I didn't say like maybe some of them we priced it incorrectly to begin with, and so sort of moving it. And when I say pricing it incorrectly, it was a function of sort of interest rates. So some homes we've had in sort of lower interest rate times, and so the lower interest rate justified a higher price, and so somewhere in between, interest rates went up, and so in order to be, we can't change interest rates, so we had to change the price as a result of that. I don't anticipate this to be that much longer. I think there's a handful of homes that we're trying to get through, and then once we're through with that, I don't anticipate sort of us cutting prices.
Got it. So when Doorvest sells a property to customers, there's no realtor involved. So does that mean that homes get more favorable pricing since there's not a standard 5 to 6% realtor markup built into that ARV price?
Yeah, thanks for the question. And the short answer is yes. We've sort of employed the direct to consumer model, which helps us save on transaction costs. Part of that is sort of like agent commissions and things of that nature. And so as a result, we're usually able to offer those savings directly to our customers.
Got it. Do you think that at some point when it comes to rental growth, which has primarily been a supply side, will it hit a ceiling driven by wage levels?
Yeah, I think historically in the past, we actually have not seen a correlation between rental growth and wages. And in fact, we haven't even seen, which is actually kind of weird. I don't know the details on this, but I've seen sort of the high level on it. But even home values don't have a direct correlation to wage growth. We kind of look at charts, like we see that wages have grown a little bit over time and home values have kind of gone up, sort of hockey stick style. I'd say that rental growth specifically is a function of supply. Supply first and foremost, and supply, as we all kind of know, like the nation has a housing shortage in general, so we'd anticipate rental rates to continue to grow over time. And I think the historicals back it up too. Like if one looks at any chart of rental growth, average rents over time, it literally just looks like a straight line up and to the right. It just takes some time.
Got it. All right, we're slowing down on some questions, but we do have some questions about Doorvest in particular and our future plans that I'd like to get to. Are there any future plans for Doorvest to offer multifamily investment properties?
Good question. We get asked this quite frequently. The short answer is yes. The nuanced answer is when is the question. So I'd say right now we're focused on easily accessible homes, which is predominantly single family homes, because one home is cheaper than two homes. One home tends to be cheaper than two homes that are connected to each other, and so on and so forth. From time to time, we'll get like maybe small duplexes and quadplexes and things of that nature, but there isn't much of a focus there. I think once you get above 4, like the financing changes and a lot of sort of the structuring changes, and it's a totally different ball game. So short answer is yes. The question is just when. I probably urge you to think about sort of the liquidity of owning single family as well. Like single family, I mean, in theory, instead of buying one fourplex, if you had 4 single family homes, you also have the ability to, if you needed cash, sell off one home, keep the remainder, things of that nature.
Love that. So there's been a rise in fractional real estate ownership. Why is Doorvest not accommodating fractional real estate ownership?
Yeah, similar to the previous question in the I think it's a matter of time. I think one day we'll sort of get closer and closer to that, whether we partner with one of the awesome companies that are already doing it, or we kind of try to do it ourselves. I'd probably say we're focused on an area where we think we could really help customers advance financial security. And so there's a lot of companies out there that are kind of doing the fractional stuff, and more power to them. I think they're offering an awesome experience, and we're friends with a number of them as well. Our focus is on direct ownership. So how do we create more homeowners, and then how do we accelerate their journey to owning more homes down the road too?
Nice. So do we have any other plans to expand to other states in 2022, 2023?
Short answer is yes. Longer answer is TBD on which markets. Stay tuned.
Love it. All right, we're slowing down here. So any last minute advice about real estate investing right now in this market, or people trying to get maybe their first 1, 2, 3 deals?
Yeah, I probably start with the advice, or maybe my general beliefs on that first home. And so I've heard this before, and it was before I even got started. It was like, you're not gonna become wealthy, you're not gonna become financially secure off of your first home. The numbers just won't ever pencil out. And so ultimately, if your goal is financial security, the objective is to own a portfolio of homes. And so what that means is like, what that means is like, how do you get your first, but use that and leverage that experience to buy more homes beyond that. And so I'd probably say, if there was one thing that, one sort of advice I had to someone interested in getting started in real estate, or becoming an entrepreneur, or self-employed, etc., it's really just to get started. Don't let, I heard this quote floating around, which is like, don't let perfect be the enemy of good. Start with your investment objectives, and then stay true to that, and then try to get something done. Maybe you make a lot of money, maybe you make a little bit of money, and it's fine, because one home, one start to a business, etc., isn't going to be the game changer. It's really the iterations beyond that.
That's great advice. Awesome. Well, looks like we are all wrapped up on questions. So I'd love to take this opportunity to thank everybody for joining us today. If you did have a question that wasn't answered, or you'd like further clarification, please feel free to reach out to us at clientpartners@doorvest.com. Utilize Fireside discount code, and you can get 50% off of your deposit. I hope to see you all in the future, and I hope you have a great rest of your day. Andrew, any last words?
No, I think that's it. We covered a lot. We should do again, assuming folks liked it. So thanks so much for tuning in. And yeah, this was a lot of fun. Amanda, you're awesome.
Thanks, everybody. Have a great day.